Welcome to the deep dive. We're here to give you that shortcut, that real insight into the crucial stuff shaping our world. And today, wow, we are plunging into a space that's just moving incredibly fast. Blockchain and crypto. We're doing a deep dive into the big trends for 2025, looking at how blockchain and crypto are, weaving themselves more and more into traditional finance. Our mission really is to pull out the key insights from the latest research and analysis. We want you to understand not just what's happening, but the why behind it. Why it matters for businesses, for investors, even for, your everyday life. We're focusing on the practical stuff, the future possibilities, so you walk away with some real clarity. And 2024 really set the stage, didn't it? It was a pretty spectacular year for crypto.
Oh, definitely. A huge milestone year.
Yeah, we saw that surging institutional interest,
Yeah.
lots of tech innovation, some big regulatory moves.
Right.
And Bitcoin hit new highs. Some analyses tie that significantly, actually, to investor feeling about a potentially more crypto-friendly political climate coming up.
That sentiment factor is always interesting to watch in this space.
Totally. Okay, so let's unpack this. The first major trend we're seeing for 2025. It's not just about flashy new things. It's about existing blockchain services really hitting like critical mass,
Yeah.
wider adoption.
Yeah, what's really fascinating is seeing these things move from, being kind of niche, maybe a bit techy,
Right.
to becoming actual mainstream financial tools. It's not just about trading coins anymore.
No?
It's about changing fundamental financial processes, making things more efficient, transparent, more accessible for everybody.
And right at the front of that seems to be tokenized real-world assets, RWAs.
Exactly, RWAs.
So we're talking about taking things like what? Property,
Yeah.
commodities,
Man,
real estate,
Yeah.
securities,
all of that.
and turning them into digital tokens on a blockchain. It sounds complex, but the idea is basically making them easier to trade, right? More liquid.
Precisely.
Yeah.
Better liquidity, more transparency, easier access. Think about something traditionally hard to sell quickly, like a piece of real estate. Tokenization allows for fractional ownership. Yeah. So you could, digitally own a small piece of a building.
Okay, that makes sense. Easier to buy and sell smaller chunks.
That's the idea.
Yeah.
And 2025 looks like the year RWAs really take off in an accelerated way. That's the projection, hitting critical mass.
Critical mass.
And people are pushing the boundaries, thinking about tokenizing maybe even medical data or personal biometrics.
Whoa, okay, that's further out there.
It is, but it shows the potential to unlock new markets, fundamentally change how we handle ownership digitally.
Interesting. Okay, then there's DeFi, decentralized finance.
Yes. DeFi.
These are the financial services on blockchains running without the usual banks and middlemen, right?
That's it.
Okay.
Alternatives for banking, lending, trading, all built on code, operating decentrally.
And the growth projections here are, well, they're pretty wild.
They really are. DeFi could hit a $100 billion valuation in 2025.
100 billion.
Yep, which is more than double where it was in 2024.
Wow.
And that number, it's not just a statistic. It signals a real shift, potentially moving power from centralized banks more towards users.
How's that growth happening?
It's driven by things like tokenized securities, high-value assets coming onto DeFi platforms, attracting both regular investors and the big institutions.
Okay.
Plus, the platforms themselves are getting more mature. Things like automated market makers, AMMs.
Right, for direct trading.
Yeah, peer-to-peer trading, no order book needed, and decentralized exchanges, DEXs, cutting out the traditional brokers. It's all getting more robust.
Gotcha. Now, we can't talk mainstream adoption without mentioning crypto ETFs.
Oh, absolutely not. The ETFs were huge.
Especially the spot Bitcoin and Ethereum ETFs approved by the SEC back in January 2024. That felt like a watershed moment.
It really was.
Yeah.
Because it suddenly gave traditional finance players a really easy way in.
Right. No need to grapple with crypto exchanges directly.
Exactly. Just buy the ETF through their normal broker. And that opened the floodgates for a massive inflow of institutional capital.
And we saw Bitcoin's price react, didn't we? There was that notable boost getting above $100,000, especially after the market reacted positively to former President Trump's victory announcement.
That surge tells you a lot, doesn't it? How much the market craves perceived regulatory certainty and that institutional stamp of approval.
Yeah. So what's next for ETFs?
Well, looking ahead, projections suggest Bitcoin ETFs alone could see $40–50 billion in inflows this year.
40 to 50 billion just this year.
That's the forecast. And there are over 10 pending ETF applications for other cryptos, Solana, XRP.
Okay.
So that signals even wider institutional interest, deeper integration into standard investment portfolios.
Okay. Another key piece seems to be stablecoins, specifically for enterprise use.
Mm-hmm. Stablecoins, very important.
These are the digital coins pegged to regular currencies like the US dollar, right, to keep the value stable.
Exactly. They offer the stability of fiat currency, but with the benefits of digital assets. They grew steadily in 2024, and the projection is they could double in size.
Double. To what?
To $400 billion by the end of 2025.
400 billion. Wow. Why are they so important for businesses?
Well, they're not just a way to avoid crypto price swings. They're becoming a kind of foundational layer for really smooth digital transactions.
Okay.
Think about businesses making payments, especially cross borders. Stablecoins can make that almost instant, much cheaper.
Right. Cuts out delays and fees.
Yeah. And they also provide vital financial access in places where traditional banking is limited or difficult to access. It's like digital cash that works globally.
Okay, now here's where, for me, it gets really interesting. It's not just us regular folks anymore, right? The big institutions are properly getting involved.
Oh, absolutely. The scale of institutional involvement now is
Right.
it's pretty remarkable.
What are we seeing?
We're seeing that growing interest in the RWAs we talked about, and the ETFs, obviously, but also major companies actually putting Bitcoin and other cryptos onto their balance sheets.
Holding it as an asset, like gold or cash.
Exactly.
Yeah.
And look at the payment networks, Visa, MasterCard, they're incorporating blockchain.
Right.
And the huge financial players, Fidelity, BlackRock, Goldman Sachs, JP Morgan, they're all moving into the RWA space.
So the giants are here.
They are. And that signals real confidence that blockchain can transform traditional asset markets, not just be a sideshow.
And the amount of money.
It's expected to accelerate. Institutional crypto investments could surpass the $500 billion mark in 2025.
$500 billion.
Yeah. Driven by demand for regulated ways to invest, like the ETFs, and also new products like Bitcoin loans.
Bitcoin loans, what's that?
Basically, allowing institutions to borrow against their crypto holdings without having to sell them. It's a big deal for liquidity.
Okay, gotcha. So with all these big players jumping in and existing services booming, what about the underlying tech? What new services are emerging and how are they solving the old problems?
Right, because this isn't just about adoption, it's also about innovation. 2025 is big for brand new services and tackling those long-standing blockchain challenges.
So connecting the dots, this feels like the whole ecosystem is just maturing, right?
Exactly. It's becoming more robust, more scalable, much more accessible.
Which leads to the big question, doesn't it? How quickly does this stuff actually change our daily lives? When does it move from headlines to, just being how things work?
Yeah. So what's on the horizon in terms of new services?
Well, one area is blockchain as a service, or BI.
BI, like software as a service.
Kinda, yeah. It's basically cloud platforms that let companies use blockchain tech without needing to build and manage all the complex infrastructure themselves.
Makes it easier to get started.
Much easier. Big tech companies like Microsoft, Amazon, they're offering these. And that's driving more use in supply chains, finance, healthcare.
So it lowers the barrier to entry for businesses.
Significantly.
Yeah.
No need for a huge upfront investment in blockchain experts or hardware. More companies can experiment and integrate it.
Okay. What else?
Then you have central bank digital currencies, CBDCs.
Ah, the government digital money. Yep. Government-backed digital currencies. The idea is to improve payment systems, cut transaction costs, boost financial inclusion, and 2025 is poised to be their breakout year.
Breakout year. Which countries?
We're expecting several countries like China, India, the EU to potentially launch fully operational CBDCs.
Okay. How do they fit in with, Bitcoin?
That's the really interesting dynamic. You'll have CBDCs coexisting with decentralized cryptocurrencies.
So government money and non-government money, side by side digitally.
Kind of. CBDCs offer stability, government backing. Decentralized crypto offers things like privacy, user autonomy, resistance to censorship. It's a fascinating contrast.
What about the U.S.?
Well, that's one to watch. Market observers are paying close attention because there have been pretty strong signals from some political figures, including former President Trump, about potentially stopping the Fed's CBDC work.
Interesting. So the U.S. might go a different way.
It could. It adds another layer to that coexistence question.
Okay. Now, no tech is perfect, right? Blockchain's had its issues, speed, cost, different chains not talking to each other.
Definitely. Scalability, interoperability.
Yeah.
Those have been big hurdles.
But 2025 is seeing big progress on solving these.
Huge strides. This is where the deep engineering work really shines, tackling those core limitations. Interoperability, scalability, security, privacy, and also sustainability. These fixes are crucial for broad global adoption.
So how are they fixing, say, speed and cost?
A big part of that is layer 2
Layer
solutions.
twos, that's
Think of
hard.
them like express lanes built on top of the main blockchain highway.
Ah, okay. Takes traffic off the main road.
Exactly. They handle lots of transactions off-chain much faster and cheaper, then settle them back on the main chain later. Examples are things like Ethereum's rollups or Bitcoin's Lightning Network.
So they make using the network practical for everyday stuff.
That's the goal. Faster, cheaper transactions. It makes a huge difference for accessibility. Before layer 2s, every little thing clogged up the main chain. Now you can get massive increases in transaction volume without sacrificing the main chain's security.
What about getting different blockchains to connect? That siloed nature problem.
Yeah, interoperability. That's been a tough nut to crack. But we're seeing solutions emerge that act like bridges between these separate blockchain islands.
Bridges, how do they work?
Well, you have projects like Polkadot and Cosmos using things called relay chains and hubs. They act almost like universal translators, allowing different blockchains to communicate and exchange data or assets. We're also seeing more use of standards like the Inter-Blockchain Communication Protocol, or IBC, is becoming a key piece for that cross-chain world.
And what about security and privacy? Always big concerns.
Constant innovation there. We're seeing more robust encryption, decentralized ways to manage identity, things like multi-signature security.
Multi-signature.
Yeah, needing more than one key or approval to
Uh-huh.
authorize a transaction.
Yeah.
Adds layers of security.
Okay.
And then you have advanced tech coming in, like improvements related to quantum computing resistance, AI helping with threat detection, and zero-knowledge proofs, ZKPs.
Zero-knowledge proofs. I've heard that term. What's the big deal there?
They're pretty amazing, actually. Imagine you need to prove you're over 21 to buy something online.
Right.
Normally, you'd show your ID, revealing your name, address, date of birth, lots of info.
Yeah.
A ZKP lets you prove you're over 21 without revealing any of that other information. It just confirms the fact is true.
Wow. How?
Complex math, basically proving knowledge of something without revealing the knowledge itself. It's a massive boost for privacy online.
Okay, that sounds powerful. Finally, on the tech side, what about the environmental impact? The whole Bitcoin uses too much energy thing.
Yeah, sustainability is a huge focus now. Bitcoin's proof-of-work mining is energy-intensive, no doubt, but the trend is definitely shifting. Well, Ethereum's move to proof-of-stake, or POS, was a major moment. PS uses vastly less energy,
Right. That was big news.
and it set a trend. Now we're seeing more green crypto projects and this idea of regenerative finance, or refi.
Regenerative finance. What's that?
It's going beyond just being sustainable or less bad. Refi projects aim to actively work to restore the environment.
How? Using blockchain.
Yeah, using blockchain maybe to fund ecological projects, track carbon credits more transparently, things like that. We're seeing pushes for carbon negative mechanisms and mining operations powered only by renewable energy. It's a positive shift.
Okay, so the tech is evolving fast. Now let's broaden out again. Beyond just finance, how is blockchain weaving into other tech, other business areas? It feels like it's moving beyond just money.
Oh, definitely. It shows how adaptable blockchain is. It started niche, but now it's looking like a foundational tech that can really redefine how whole industries work. It enables new economic models, new efficiencies, things that just weren't possible before.
And one of the really hot areas seems to be mixing blockchain with AI, right?
Absolutely. The convergence of AI and blockchain. It's a new tech narrative everyone's watching. It's expected to really accelerate in 2025.
What does that look like in practice?
Well, it opens up new opportunities for investors in AI-driven crypto projects, but also novel solutions for industries.
Like what?
Think about decentralized AI platforms, sometimes called DAI. Instead of AI running on one company's servers, you distribute the computing power and data storage across a blockchain network.
Makes it more resilient, transparent.
Potentially, yes. You could also have AI agents bits of code that operate autonomously within decentralized apps, maybe executing smart contracts based on complex conditions.
Okay.
And those zero-knowledge proofs we mentioned, crucial for verifying identities securely and privately within AI systems.
Right, proving things without revealing raw data.
Exactly. Plus, there's this growing area called decentralized physical infrastructure networks, or DePIN.
DePIN. That sounds intense.
Yeah. It's about integrating blockchain with actual physical infrastructure. Telecoms networks, energy grids, transportation systems.
How?
By incentivizing people or businesses with tokens to contribute resources, like sharing your Wi-Fi bandwidth or contributing data from sensors, or providing energy storage. It's like building decentralized versions of essential services.
Wow, okay, that's a big vision. And we also have Web3 and DeFi evolving together.
Yeah, Web3, the idea of a decentralized internet built on blockchain, aims to give users more control over their data and privacy.
Less reliance on big platforms.
That's the promise. And when you combine Web3 principles with DeFi, you get this potential new financial frontier, offering more options for managing money, getting loans, making international deals, directly challenging the old banking models. Imagine your bank account just being a smart contract you fully control.
Okay, that's a paradigm shift. But what about the rules? Regulation always seems to be the big question mark.
It is. Regulation is both a key challenge and opportunity. Governments everywhere are grappling with it. Rules around anti-money laundering, AML, consumer protection, even environmental impact.
Where are we heading with that?
The expectation is that by 2025, global regulatory frameworks will start to become more cohesive. The goal is to find that balance, right? Encourage innovation, but also protect consumers and the financial system.
And clear rules could actually boost growth.
Absolutely. Clarity reduces uncertainty for businesses and big investors. Again, some market analyses point to investor sentiment being quite positive about the perceived crypto-friendly stance of the incoming U.S. administration, potentially speeding things up.
Okay, so it feels like the lines between traditional finance and this new digital asset world are really blurring.
They absolutely are. It feels inevitable now, doesn't it?
Right?
Not if, but how fast.
Yeah.
Things like tokenized RWAs, stablecoins,
Yeah.
they seem poised for mainstream acceptance within traditional finance. You're seeing banks starting to offer crypto loan products.
Right, like the Bitcoin loans you mentioned.
Exactly. And we'll likely see more hybrid financial products emerge, things that blend the decentralized nature of crypto with the regulatory oversight people expect from traditional finance.
And we're already seeing big fintech companies integrating this stuff.
Oh, yeah. Look at PayPal, Visa. They're already handling cryptocurrencies, experimenting with stablecoins. They're pushing these use cases into everyday transactions.
Okay, so it's happening across the board. And beyond finance, you mentioned gaming, healthcare, real estate, supply chains.
Yep. The use cases are incredibly broad. It's amazing when you hear stats like potentially 10% of the global population now holds cryptocurrency.
10%. Wow.
And that figure, 96% of financial service professionals agree that blockchain has entered mainstream adoption.
96%. So the people inside the traditional system see it.
They see it. It's not a fringe thing anymore. And while banking still has the biggest slice of the market share, almost 30%, it's really interesting that process manufacturing is over 11%, discrete manufacturing nearly 11%.
Manufacturing. Why
Right.
there?
Think about the core benefits blockchain offers. Improving efficiency, cutting out friction, building trust through transparency, scaling quickly. Supply chains are a perfect example. Tracking goods from source to consumer, proving authenticity. Blockchain is ideal for that.
Okay, that makes sense. Can we zoom in on a couple more specific business examples? Like, how are companies actually using this day to day?
Sure. One example is electronic voting. Using certain blockchain protocols like delegated proof of stake or DPoS can create voting systems that are fast, flexible, potentially more democratic, and highly secure.
Making elections more trustworthy.
That's the aim. More transparent, resistant to tampering. Every vote is an immutable record. It's about building trust in the process.
Okay, interesting. What else?
Another huge area is trade finance, international trade.
Right, you mentioned that being complex and paper heavy.
Exactly. Historically, tons of documents, lots of intermediaries, slow processes. Blockchain can transform that. Drastically cut down paperwork, reduce transaction costs, simplify the whole complex operation.
Faster, cheaper, more secure international trade.
That's the potential. Imagine every step, every handover, verified instantly on a shared, trusted ledger.
Okay. Now, a lot of this sounds great for big corporations with big budgets, but what about small businesses? Can they actually use this stuff?
That's a really important question. How do smaller companies, maybe with limited resources, tap into this? And the answer is yeah, it's becoming much more attainable.
How so? What are the key benefits for them?
The core features are powerful for any size business. The fact that blockchain data cannot be corrupted, that it's decentralized, meaning less risk of a single point of failure.
Right.
All that leads to less failure, zero scams, inherent transparency, and authentic nature to records, and crucially, it often eliminates the need for a third party.
Cutting out middlemen costs and delays.
Exactly. It's like getting enterprise-grade security and automation features, but potentially without the massive enterprise price tag.
So what are some specific uses for a small business?
Well, accepting Bitcoin and cryptocurrency payments is one.
Why would they do that?
It can lower transaction fees, especially for international customers,
Yeah.
and it can help deal with fraudulent chargebacks because crypto payments are generally permanent, irreversible.
Ah, okay, so less risk of reversed payments.
Right. Think of a small online shop selling globally. Crypto payments can be faster, cheaper, and final,
What else?
using blockchain for cloud storage.
Storing data on a blockchain.
Yeah, decentralized storage networks can offer very safe, secure, and often quite reasonably priced data storage. That can be a big cost saving. You mentioned a Canadian study showing businesses spent an average of $27,000 on cloud services in 2019.
Right.
Blockchain alternatives could potentially cut that down while maybe even increasing data security and resilience because it's not stored in one central place.
Okay, interesting. Anything else?
Yes, smart contracts. These are huge for small
Well,
businesses.
the self-executing agreements.
Exactly. Agreements where the terms are written directly into code on the blockchain.
Mm.
For a small business, this could automate things like commercial leases, vendor payments, maybe even simple employee contracts.
How does that help?
It offers protection and security because the terms are locked in and transparent, and it cuts costs dramatically by removing the need for intermediaries, lawyers, brokers for standard, routine agreements. Imagine automatically releasing payment to a freelancer once the blockchain verifies a project milestone is complete. No invoices, no chasing payments.
Okay, that streamlines things significantly.
Wow.
We have covered a ton of ground today, from existing crypto services just exploding in adoption
Yeah, RWAs, DeFi, ETFs.
to brand new services emerging like BOSS and maybe CBDCs.
Mm-hmm.
Then all the tech innovations solving those core blockchain problems, layer 2s, interoperability, privacy with ZKPs, the green crypto shift,
Right, the foundational improvement.
and then how it's integrating with other huge tech like AI shaping Web3
That convergence is key.
and reshaping traditional finance, empowering businesses big and small, right down to using smart contracts for leases or accepting Bitcoin payments.
It really touches almost every area.
Oh.
And when you look at the projected economic impact, $1.76 trillion potentially added to the global economy by 2030.
$1 trillion.
And the blockchain market itself projected to grow at nearly 88% CAGR between 2023 and 2030.
Mm.
It just points to a future where blockchain isn't just, an option. It's becoming a foundational layer.
Like the internet itself.
Perhaps a foundational layer for finance, for business, for technology infrastructure globally.
Mm.
So the question for you listening is, as you think about all these trends we've unpacked, what new possibilities does this open up in your field, your business, your own interests, now that you have this clearer picture of where things are heading?